please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's invite our market master, Mahesh Patil, the co-chief investment officer of Aditya Birla Sun Life AMC, joins us now to talk about his view on the markets as a whole and, of course, individual sectors. Mahesh, hi, good morning.
Good morning.
Before I ask you your view on the markets, what are your thoughts on this whole lower borrowing program and, you know, the impact that it would have on the PSU banks bond portfolio? Do you think that it's just a trading pop, if anything, or do you think there's some merit in buying PSU banks now?
Well, what it gives is that the rally in the bonds, what we are seeing, it gives some relief to the PSU banks, because at the end of this quarter, otherwise you would have a huge mark-to-market losses which would be there. So I think it just provides relief to that extent. But the other challenges which the PSU banks have, I think those remain, I would say that. I think overall it is good because the flattening of the yield curve, okay, which it will do, because the borrowing will be more at the lower end, at the higher end, the mid-tier, okay, where the borrowing has come down. So that should help the overall the NBFC and the banking sector as such, I would say. But I think the real challenge for PSU banks would be in terms of how to get the act together, how to get the capital, okay, what they require to provide for the NPAs and really get on to the credit growth, which we are not seeing really happening. So I don't think beyond a point, I think there will be too much to sustain for the PSU banks.
Okay, two questions. This is the time when they are at their worst in terms of NPA, accelerated NPA recognition, and under the scanner for whether a loan is a fraud or a failure. At such a distressed time, would you pick up one or two leading PSU banks? And the second question is NBFCs. Do they become attractive?
Yeah, so the PSU banks, as you rightly said, yeah, there could be some merit in looking at one or two PSU banks, okay, where you're pretty comfortable in terms of the overall NPAs which they have in the overall restructured book and the NPAs which are there. If we don't see that signs of increasing that further, and banks which are actually focusing on not trying to grow but trying to really consolidate and focus on improving the ROA, which we think one or two banks are doing that. I think those over the medium term, I mean the near term, they'll still face challenges because the impact on the P&L will be severe. But if you take a 2 to 3 year view, I think there could be merit to look at some of the larger PSU banks, which are really working in terms of trying to get their processes right. A lot of people are working in terms of credit underwriting. I think we should help in the longer term. And I think a lot of this cleanup which is happening, it is, I think, good for the banking system from a longer term. Near term, there is a pain which is there, which we are seeing on these banks. To answer your second question about the NBFC sector, I would say that, yeah, we have seen some pressure in the NBFC space because of the rise in interest rates and concerns about increasing in the borrowing cost, because a lot of the NBFCs were borrowing at the short end. So that concern, I think, as interest rates remain higher a bit, I think it should still remain. In fact, the flattening of the yield curve will be marginally negative for the NBFCs because they borrow at the short end and lend at the long end. But I think overall, I think the NBFC sector, on the other side, I think on the growth side, is likely to benefit, because I think the constraint which the large corporate banks and the PSU banks are facing at this point in time, and we are not seeing them coming back aggressive in the market and competing. In fact, we met some of the large PSU banks, and their focus is purely this time on profitability rather than trying to really grow the balance sheet and the book. So I think that will provide space for the NBFCs to continue to grow, as long as they identify their niches, and there is a lot of underserved need which is there in the tier 2 and tier 2 cities, especially the NBFCs catering to the rural segment, the rural India. Okay, there is a good amount of growth, and both by increase in penetration as well as the pickup on the rural side, I think we should see a stronger loan growth. So the top line growth for the NBFC should be fairly strong, despite some marginal pressure on margins. So overall, I think the sector should do well from here.
Okay. Tata Steel is now the top Nifty gainer, 2.5% higher on that stock, 596. Mahesh, good morning. On metals, do you think this correction has presented a buying opportunity, or do you reckon that this cycle is close to playing out?
So metals have been a bit tricky. We have seen the stocks underperform recently on concerns about trade wars, China slowing down. Though we haven't seen any large correction in the metal prices, though. I mean, there has been some correction in zinc prices, some moderation in aluminium. But if you look at the assumptions for metal prices for next year and where the current prices are, I think they are still current prices are higher. So I don't see any much risk to earnings for next year. However, if the it plays down further in terms of trade wars. Okay, they become much more intense, and we actually see a slowdown in global growth, and more so in China. I think then one needs to worry about a bit. But at the moment, frankly, we are seeing neither of that. I mean, we haven't seen any slowdown in terms of overall world growth rate, and the cuts in China still remains fairly much intact. By the end of in April onward, you will see some production capacity come back as the cuts on the for the pollution control norms are eased off a bit. But I think overall, I think the Indian metal story for the large companies is mainly about deleveraging. We are seeing the balance sheets getting repaired, and if metal prices remain here, even if they correct marginally, I think there is still good value in after the correction. Okay. I think we are seeing good value in the metal space.
Okay, I also wanted to talk a little bit about your sector-specific funds, your BSL Infra Fund. It's interesting because the stocks you have here have done quite well. Blue Star, I mean, you know, very hot summer expected, so good prospects there. Ashoka Buildcon getting a lot of orders. Cummins India. Has the time come now, this year at least, to put more money into some of these sector-focused funds, maybe infrastructure, because of the pickup in the capex cycle?
So the infrastructure sector is looking better. In fact, we are seeing across many sectors now looking up. So it was only initially in the road sector, and that's where a lot of, in fact, last couple of months we are seeing a large inflow of order for a lot of the contracting companies, mainly from the road sector, but also other areas like urban infrastructure, metro projects, where we're seeing good order inflow coming through, and railways has also picked up in terms of ordering. So I think overall the construction and the contracting companies are seeing very, very robust increase in order book, and that should really flow into better top line growth in the coming years or so. And yeah, so I think except for the power generation sector, I would say other infra sectors with the power T&D also, things are looking fairly good over there. Okay. So if you take a slightly longer term view from where the capex sector also starts to revive, because that's again a lot of the infra portfolio, if you look at there, a lot of these capital good companies which are there. And there, while we are seeing some signs of pickup over there, if you look at commentary for Thermax, for a long time they have actually sounded a bit positive, and pick up in capex in the metal sector, for example, steel sector. So I think if the capex cycle also looks to pick up around the corner, then I think it should be a good time for the infrastructure sector. But generally we don't, at this point in time, we'll still prefer a more diversified kind of a portfolio, because we're not seeing any strong tailwinds across any of these sectors.
Fair point. Actually, the first dip has been bought. I just wanted to inform you that the market slid from 0.6 gains to 0.3 gains and is now back at 0.5% in terms of gains. And in the mid caps, it's actually been going from strength to strength, and now it's a 1% gain. 6 stocks in the green for 1 in the red, and we are into about what, 20 minutes of trading, 15 minutes of trading. So it's at least kept its nerve for this long. As of now. Mahesh, how are flows? Anybody affected by this hiccups that the markets have had? Your not SIP and more importantly non-SIP flows?
So there has been talk about that because of the market correction, and also the fact that we've seen that the markets are corrected by around 10% from the peak, right? But some of the SIPs which are 1 year old have turned a bit negative. So there is a concern that a lot of new investors who are coming in, whether they will slow down. So we haven't seen that, at least for the month of February, we've seen still the flows were fairly strong at around 20,000 crores. This month, there could be a marginal slowdown is what the numbers are indicating. The SIP book is still growing, though the growth rate has moderated a bit, but that is expected in this kind of environment. So as of moment, we are not seeing any major slowdown. There has been some, I mean, I have recently visited some of the distributors and had some roadshows with retail investors. So they are concerned a bit, but I think the overall long-term story still remains fairly good. A lot of investors were also waiting on the sidelines for a market correction. So a lot of large ticket money got pulled out in the month of Jan. Okay, so I think that money is waiting to come into the market, and I think with the recent correction in the market stabilizes over here, you can see that money coming in. Okay. So overall, I would say that you might see around 15-20% slowdown in flows from what we are seeing, the average monthly run rate for the last 6 months. But I don't think it should really falter beyond that.
Okay, I just have one last question from my end. We're in about 10 days from now, we're going to start talking about earnings once again. Infosys coming out soon. You have it as one of your top holdings in your frontline equity fund. You think a lot of the good news has played out because these stocks have gained quite a bit, 15% since the start of the year, or is there more to go?
Yeah, so IT sector has been steadily improving. Nothing dramatic though. If you look at the commentary for some of the larger players, even Cognizant or Accenture globally, there has been a tad increase in terms of the growth, but it's just about 1 or 2%. So don't see any major increase in earnings, but the outlook is definitely looking a bit better. and I think the rupee itself is there is some pressure building on the rupee right now, because if you look at the current account deficit and where oil prices are, so that can act as a bit of a tailwind for the sector. So the sector looks fairly good. I think, yeah, after the recent rally, I think the stocks are fairly priced. But I think if there is further depreciation of rupee from here, I think then you could see a marginal increase in earnings upgrade. So I think sector, we are at the moment neutral on the sector, not too positive or too negative looking at the current valuations.
All right, Mahesh, pleasure speaking with you.